I grew up here in the Chicagoland area, the oldest of four. I hated school, but I always liked learning. So I always read a lot, and I read a lot of things outside, the subject matter of school. It's a lot more than math. Everyone just thinks it's yes, you do need some good math skills, but far more importantly, you need to understand economics. You need to have a deep knowledge of history. You need to know behavioral finance, because ultimately it's a very emotional game, both for the investor and the other investors out there. I'd say just mental discipline, because it is emotional. It was probably my early 20s. I started reading a financial newsletter by a gentleman named Doug Casey. I learned a lot of things from. One of it was this aha moment, like, wow, you can apply all these things in the field of finance, right? You can apply economics. It actually has a role in the stock market. That was a big deal. And on top of that, I think he brought forth really the qualities which I try to emulate, of really a deep curiosity and critical thinking. Don't accept anything at face value. Always think about the headlines you're reading, because 9 times out of 10, there's more to it, or they may just be flat out wrong. The biggest lesson, this applies really to everything when you just look at history, I would say, is everything changes. The secondary law would be, a lot of times you never see that change coming. And that's what the stock market's like. I mean, everything is a matter of probabilities. No one saw the lockdowns coming that we had 5 years ago. Be prepared for anything. And if you are, you're going to minimize your risk and I think maximize your returns. It was probably just out of college. This is early to mid 90s. And I bought 2 stocks, and they're very different. They were great lessons for me. They're both mining stocks. One was called Voise Bay and the other was Brix. And anyone could look these up, but they're both huge winners. Voise Bay probably was 20-1 type shot, and Brix was likewise, until it turned out that Brix was a complete fraud. And so I thought those were great lessons, because on the one hand, with Voise Bay, with that kind of return, I learned the potential of the stock market. It was exciting. You learned a lot of lessons by doing it. On the other hand, with Brix, when it fell apart at the end, you realized anything could happen. And so I always say it's kind of like golf, right? When you go golfing, you get that one good tee shot, you keep coming back because it brings you back the next time. But on the other hand, the ones that you miss, or the ones that you just don't do well on, those are areas you need to improve on, and they're just as valuable, right? It may not be as exciting, but those losses teach you a lesson and set you up for better gains in the future. I'm a big believer in kind of a contrarian method to investing. I think the biggest profits and the best way to minimize risk is if you can identify an asset or security out there that's mispriced. So your expectation is totally different than what the so-called mainstream investors think. But just as importantly, you have to identify the catalyst which will bring those two together, right? You have to identify, okay, so if something's been cheap for 3 years, what's going to make it so it's not cheap anymore? If you can identify that, and if you could find that mispricing that's always out there in the market, no matter if it's good times or bad, it always exists. If you can identify that, that's probably the best area to really make some serious money in the stock market. In addition to kind of a contrarian mentality, and that's me personally, not necessarily the firm as a whole, but we do have some, I'd say, firm-wide values that we try to implement. And one is what I would call kind of white glove service to clients. We probably all had the experience where you go to a new tax accountant, you go to an estate attorney, and they hand you a questionnaire that they want you to fill out that's like 50 pages. We would never do that to a client. We always try to make things very easy. You can read as much as you want of the subscription document, but ultimately, you just have to sign it because we filled everything in, right? It's that mentality that I think really helps distinguish us apart from our investment acumen. Everyone's very busy, and you're paying us for a reason, right? Let's make your investments easier, not harder. And I think a lot of professions fail in that. We're not doing a lot of the same things everyone else is doing, but we're much more willing to embrace private investments. We're much more willing to have a critical eye on the economy, unlike other people that just assume always be in the market because everything's going up. So I think we bring that to the table. We're definitely, if you read anything we've written in the past, if you listen to our podcast, we just have a different approach, which I think is better for investors.